AI is going to change crypto forever. And there's been something that really started to make me think about why this is going to be so good for crypto. I want to explain that. Hit the bell notification, turn on the subscribe button, hit the like button. There's a link to Patreon in case you want to know why I'm buying or selling. AutoGPT has been exploding this week. And in case you haven't heard about it, they just talked about it on the All In podcast. It's been exploding in terms of search volume. It's a new way to use AI that is very advanced, and it's showing some crazy, insane things. And, before you click off this video because you think, just another AI tool, this is getting kind of insane. It basically can use one AI to talk to another AI to continue the process. So you just give it one prompt and it can create much larger tasks or complete much larger tasks than just answering a certain question for you. It can basically do what an assistant would do in a fraction of the time and for a 100th or 1,000th the price of an assistant. And I'll show that, but as you can see here, obviously search trending going up, and this is delayed by about 4 days. This is one example of what it can do. I pretend to be a fake shoe company and gave AutoGPT a simple objective: do market research for waterproof shoes, get the top 5 competitors, and give me a report of their pros and cons. Here's how it went. And we won't go through this too long, but first it went straight to Google to find the top 5 waterproof shoe reviews. Once it found links, it created questions for itself like, what are the pros and cons of each shoe? What are the pros and cons of each top 5 waterproof shoe? Top 5 waterproof shoes for men. It continued to analyze the various sites with a combination of Googling, updating its queries until it was happy with the results. Here's an example of when it thought critically. It knew that some reviews could be biased to fake, so it had to validate the reviewer. And it kind of goes through this here. We won't go through it, but it even spawned its own sub-agent to carry out a task of analyzing the websites. There were a few times it got stuck. There was no text file. It was able to figure those out and fix the issue all by itself. The result, a pretty detailed report of the top 5 waterproof shoes with their pros, cons, and a nice conclusion summarizing the report. Oh, and it only took 8 minutes at a cost of 10 cents. This was a pretty basic example too, entirely unoptimized. I mean, look at all this information. It's not saying, hey, what are the top 5 shoe brands? It's basically using AI to continue to work with AI to improve productivity. And this was done, you could just type this in and save hours of time. Now, why does this affect crypto? Well, obviously there are a lot of companies that are getting in on AI that you could buy directly. You could buy Amazon. You could buy Microsoft. You could buy Google. Right? These companies will directly benefit because they are going to be some of the companies that are making AI. But this is going to improve everyone's lives, I think. Just like when we got internet, it improves GDP, or it increases GDP and improves productivity. So this is going to, I think, make all of our lives a lot easier. If you didn't have to spend hours researching where you want to go on a vacation, but you just said, hey, write up where I should go when I go to Greece, what I should visit. I like historical sites, and then give me a schedule to go by and tell me where I want to travel and how I want to travel, where I want to eat, that kind of thing. It could do all that for you and save you hours of research. Now, this can also affect cryptocurrency because let's say we're in a world that has a huge amount of productivity, right? 10 years down the line, people don't have to go do research themselves. They can do what they want to do, or they don't have to pay someone to do it. They can spend their time working on other things. That's just going to improve, just like the internet, right? It cuts out so many middlemen. It cuts out a lot of the wasted time. So it's going to improve productivity. It's going to increase GDP. It's going to make everything more abundant, I think, our time more abundant, which people will pay for. What do you need? Do you want something that's slow moving, like a bank? Do you want something, an intermediary that you have to wait on to get paid out for different processes? No, you're going to want smart contracts, right? You're going to want a program that runs and basically, if this, then that. If you do this, then you get paid out this. And I think Ethereum and some of these other smart contracts will do quite well, right? There's a narrative around that where if an AI is running consistently and talking to other AIs, they can't wait for some human intervention to pay them. Of course, there are other ways to get around that, but they don't want days and days of waiting through banks and Swift and waiting over the weekend because there can't be payments sent. They're just going to send it like that. Also, what do you want if there's extreme abundance, right? There's going to be more money floating around. You're going to want some decentralized, immutable money that is scarce. And when you type that in, obviously, first thing that comes up, Bitcoin. You don't want to be you don't want to be centralized where you're depending on the government and their own policies. You don't want it to be changeable, and you want it to be scarce, because a lot of people will have a lot of money and they're going to be going after very few assets. Think about this, right? We're not just talking about AI changing that can do a lot of the like big brain work, right? Where you actually have to sit down and do research, but we're also talking about robots. We're talking about the Tesla robot being unveiled. Maybe it's 10 years from now instead of 2 or 3 years, but being able to do a lot of manual labor. Or if you don't believe in that, well, Amazon's robots, right? There are a ton of robot companies that can do a lot of jobs that humans used to do. On the other side, you're going to be able to figure things out and to be presented with stuff a lot faster, increasing that kind of productivity. So if you're sitting in your house, you can have your robots doing yard work, maybe in 10, 20 years. You can not have to research your vacation. You just say, hey, I want to go to Santorini, write me something up, and then it will write it up for you, right? There's going to be so much money floating around from all this increased productivity. People are going to be more willing to spend money on things like this to save their time. I mean, how much money do you spend to save a little bit of time now, right? You go out to eat, it's 20% more than cooking at your house that takes 10 or 20 minutes. So people are willing to spend money. They're going to be looking for scarce assets in a world of abundance where you can get cheap labor, you can get cheap energy, you can get cheap processing power. You want something that is scarce. You want something that you can put value in that's not going to be inflated away, right? If you put money into something and then GDP raises drastically, everyone becomes more efficient. Well, that's not great because you just had your money in cash, so that's going to be eroded away. We know the Fed is going to continue printing money. We know that the Fed is going to need to increase GDP, is going to need to increase that just to get more taxes, or increase taxes on their own without GDP raising, or they're going to have to inflate the money away, right? Because they are so much in debt. This is a path that I think really leads to cryptocurrency. And even if it's not like, oh, everyone uses Bitcoin, everyone uses Ethereum, right? There's going to be a huge narrative for that. And it's going to make sense in a lot of situations, or at least some situations, to use a cryptocurrency like that as smart contracts, or to have some kind of currency. Because again, there are very few things that are scarce in this world. Think about that. And that's something that I always talk about with Bitcoin. If you are someone that has a valuable asset, let's say you have a house, and all of a sudden, the value of your neighborhood goes up drastically. Let's say a lot of people want to flow in there. Maybe oil's struck, maybe just it's a really nice area and it continues to grow. People want to move down there, like maybe Nashville, right? People build more. That's what's happened with Nashville. People want to move there. There are giant skyscrapers being built all over the place, a ton of homes being built. And that naturally brings down the value a lot. When there's a lot of supply, there's less value. Same thing with stock. If a company 10x's in a couple weeks because of some massive development, something that they figured out that no other companies can do, well, they'll probably sell off some shares. There are going to be people that are selling, and that will dilute the company. If the company sells shares, that's going to dilute shareholders, and that's essentially just increasing the supply, right? There are a lot of cases like that, but that's just how it works. Right? Bitcoin's the only thing that can't be inflated just because it's becoming more valuable. And you've seen that. Over time, it's gone from $1 to $10 to $100 to $1,000 to $10,000 to $60,000. And there's no increase in the supply besides what's already laid out. So I think AI will change cryptocurrency. I just want to give you my thoughts on that. Hopefully it makes sense. Let me know if it does or it doesn't down in the comment section. Let me know how you think this will affect crypto. And I'll see you in the next video. Bye.